Hey there, Sive Morten here with the ForexPeaceArmy.com. Let's take a look at the gold market. In general, I am really happy with the things that I see currently on the charts. With this retracement that started, it's actually going perfectly well, according with the plan that we discussed yesterday. So we talked about the possible hand and shoulders on the hourly chart and has talked about the two support levels to watch for. Now market is coming to the second one. So we talked a lot about how position could be taken there, about the splitting of the position in part and so on. So why actually things that we see is really cool. It's just because if you take a look at the daily chart, and I plot here the MACD indicator, you will see that market start flooring with the trend direction changing. So, and today, tomorrow, we also need to check it on a futures chart. Maybe on the futures chart it might happen even today, but it might be formed a bullish grabber, because all in all, market is coming to the major target that stands around 37.34. It's a 1618 extension of this big butterfly that we have here. Yes, we have more extended targets on the weekly chart, on the monthly chart, but for now, since market stands close to this target, and it might be a logical final for all this party with the Jerome Powell speech and the Fed meeting and so on. And it's quite possible for the market to reach this target based on these events. So, and that's looks really interesting. Now, if we take a look at the lower time frame, let's take a look first on the hourly chart. Here is the retracement that we talked about yesterday. If you remember, hand and shoulders, right? XOP has been completed. We said keep an eye on possible pullback. If you would like to take the long position once again, you need to pull back. Two levels we estimated. First is around 36.75, if I do not miss something, was like right here. Next one was around 36.60, 36.65. Here today, guys, I'm using also this level, which makes this confluence a bit wider, just because today we will also have this shape. So yesterday we haven't got it, but today we have clear ABCD shape with the predefined targets. First target is already completed. Now market is coming to the next one. XOP stands at 36.56, and it accompanied with this neckline of the hand and shoulders, and actually stands inside of this range of the confluence area. So if you would like to take the long position, that's the point where you need to make the decision whether you would like to take it at all or not, because actually this is the area where market will have to either to turn up and keep going with the bullish context that we have, or if it will break it, it means that we will keep going lower. In this case, probably will return back in this trading range, and that might be triggered as deeper retracement. Maybe it might be triggered by some statement from the Jerome Powell, because we do not know what he will say. Although we're hoping for the better, that it will be more diverse statement, but nobody knows. And that's the risk factor for now, uncertainty. So that's actually the reason why we're usually trying to escape and avoid the trading of the events. But anyway, I would call it from the technical point of view as some kind of the break-even area, some kind of the vital point where the next direction will be set. For now, it might be considered for taking the long position. Or you maybe apply the gradual entry, so you probably have taken some part here, as we said. Now you're coming to taking another part of the trading. What also we could keep an eye on to get the understanding what's happening through the session. Take a look at the 4-hour time frame chart, or but another shape of the hourly chart. Recall what we said yesterday. We need to see what will happen here. If market will start turning up from these predefined levels, then we could get the three drive pattern. And here you can see that market is coming to an area of around 36.50, 36.55. Which is actually should be the point where market has to reverse to keep the shape. If, as I said, it will drop, this overall shape will be destroyed and market will be ready for a deeper downside action. So, but hopefully, and as it usually happens, the deep retracement start after market completion of the big targets, and we have big target around 37.34. Now, if everything goes as we plan with this free drive, then its third drive should be around 37.11, 37.15. It's classical third drive, but since we have target higher, it's more probable that we will get not classical, but as it called 1618 free drive. It means that market is forming accurately 1618 extensions to the upside. On the second drive is 1618 to the first, as you can see, almost 1618 here. And this third drive stands 1618 from the second. It's more probable to get, that's why I put here this arrow, right, to this third drive. This is classical target. This is 1618 extension through drive. It also happens. It's a bit more rare than the classical shape, but it also might happen. And it corresponds better to the target that we have on the daily chart. So that and towards what we have as a bottom line. Here, if you would like to take the long position, you need to keep an eye on this level to make the decision. If you're scaring of this drop, it's really fast, then you could do the following thing. For instance, once market starts floating around this area, drop your time frame to the 15-minute chart. Watch for bullish reversal patterns. Maybe you will get minor hand and shoulders, butterfly pattern, double bottom, whatever. So, and you could try and take position based on these small patterns with the very tight standing stops. So if market starts moving higher, it probably will start to do this based on these patterns that might be formed here. That's if you're scaring. If you're not scaring, well, just watch for these levels and actually think about the position taken here with the hiding stops either below this level or maybe below even the 618 support, just to keep risk very small. Here's actually less than approximately $10 for contract. P contract, this is not really big risk. And just then see what will happen on the Fed meeting. Currently, we're not considering any shorts by far. And particularly this level will clarify whether we'll get the free drive on the follow time frame chart or not. So that's probably enough for me for now. Let's see what will happen and return back to discussion tomorrow.